All right, let's break this down. What we're about to do is perform an anatomy of a stock market explosion. We're going to dissect exactly how one company, Artiva Biotherapeutics, saw its stock just absolutely skyrocket in a single day, and what that tells us about the wild forces that can move markets. Just look at that number. Seriously, that's not a yearly return. It's not even a monthly return. That is what happened to Artiva's stock in one single day. An absolutely jaw-dropping surge of nearly 118%. So how in the world does a stock do something like this? It wasn't some big market rally or a complicated financial event. Nope, this all came down to one single powerful piece of news. First, a little context. The company here is Artiva Biotherapeutics. They're a clinical stage biotech firm, which means they're right in the thick of developing new treatments. Specifically, they're working on something called AlloNK for really tough autoimmune diseases like rheumatoid arthritis. We're talking high stakes, potentially life-changing research. And this was the spark that lit the fuse. The FDA granted Fast Track Designation for their main drug candidate. Now, in the biotech world, this is absolutely massive news. It basically signals a much smoother, potentially way quicker path to getting a drug approved. And you better believe investors took notice immediately. The impact was just instant. The stock jumped from a close of $2.77 all the way up to $6.01. That happened like overnight. It's a monumental leap in a single trading session. And the frenzy? Oh, it was real. Over 100 million shares were traded. To put that in perspective, that's a staggering 39 times its normal daily average. This wasn't just a price jump. This was a stampede of money flooding into one single stock. But here's where we need to add a little perspective, because this is crucial. Yeah, the new price of $6 is a massive jump from its low, but it's still less than halfway to its 52-week high of over $15. So what does that tell us? It tells us that while the surge was historic, this stock still has a long, long way to go to get back to its former peak. Okay, so now let's pop the hood and take a look at the engine. We're going to dig into the technical indicators to really understand the forces at play behind this incredible move. The best way to think about this is to imagine a car's dashboard. The speedometer is showing insane acceleration. I mean, the pedal is to the floor. But at the same time, a few really critical warning lights are flashing bright red, basically screaming at us that the engine might be overheating. Our first warning light is the Relative Strength Index, or the RSI. Just think of it like the engine's temperature gauge. It tells us if the stock is running way too hot or maybe too cold. And right now, Artiva's engine is completely redlining. Its RSI is sitting at 82.92. Now, anything over 70 is considered overbought, and that's a huge warning sign that the stock has moved way too far, way too fast, and it might be due for a cool down. This is our first major red flag. Okay, next up, we've got Bollinger Bands. These are basically two boundaries that get plotted around a stock's price. Most of the time, the price is supposed to stay inside these bands. So when it breaks way, way outside of them, that's another signal of some extreme and maybe unsustainable conditions. Artiva isn't just a little outside its bands, it has absolutely shattered them. The price is sitting a massive 157% above the upper band. This just doubles down on that overheating theme and points to what traders call an overbought squeeze risk. But hold on, it's not all warning lights. Let's look at the speedometer now, the rate of change indicator, or ROC. This thing measures one thing, the pure speed and acceleration of a price move. And the reading here is just explosive, a rate of change of over 105%. This confirms the raw power and the undeniable momentum that's behind this surge. This is the bull case in its purest form. We're talking sheer, unadulterated velocity. Now for one of the most popular indicators on any trader's dashboard, the MACD. This is a big one. It helps analysts confirm whether a new trend, either up or down, has really, truly taken hold. And for Artiva, well, the MACD is flashing a big, clear green light. It has just registered a positive crossover, which is a classic technical signal confirming that strong bullish momentum is definitely in play. This is what gives traders more conviction that the upward trend is for real. And this brings us to the central conflict of the whole story.
We have these incredibly powerful bullish signals running headfirst into some very, very serious red flags.
It's a classic technical tug of war. On one side, you have the bulls, right? And they're looking at that explosive momentum. They're seeing the confirming MACD signal, and they're saying, go, go, go. But on the other side, you have the bears, and they are screaming caution, pointing to that extremely overbought RSI and a price that's just flying way outside its normal range. So, with all this conflicting data, what's the verdict? I mean, what's the takeaway? Let's see how the technical report actually pulls all this together into a real recommendation. Okay, so here's the crucial point. In the short term, the analysis suggests patience. Tap the brakes. Those overbought signals are just too strong to ignore, so the recommendation is to wait for the stock to pull back a bit before even thinking about getting in. But medium term, the outlook is strongly bullish. The idea is that the fundamental news is so good, it could eventually push the stock all the way back towards its previous highs. And this is a really critical disclaimer from the report itself. This whole breakdown we just did, it's based on technical charts and that one piece of recent news. It doesn't dive deep into the company's financials or the science or any of that. And for a high-risk biotech stock like Artiva, believe me, those fundamentals are absolutely pivotal. And that leaves us with the ultimate question, doesn't it? We've seen the anatomy of this incredible surge. We've looked at the dashboard with its mix of green lights telling us to go and red flags telling us to stop. So is what we're witnessing a true sustainable breakout that's fueled by genuinely good news? Or is it a short-term bubble that's just destined to pop? That, right there, is the billion-dollar question.